I have been trading gold for 4 years, and out of those 4 years, I have been trading gold profitably for 2 years. And in this video, I will show you the exact step-by-step strategy and full guide into trading exactly like how I do. Now, for a quick proof that I actually know what I'm talking about and I actually trade gold profitably, I have won the last 3 trades in a row I have traded gold. And you can actually see this for yourself in my Discord server, which is linked in the description. I post every trade I take here live as it happens, and as you can see, I went long on gold here, and it is currently juicing money. Also, I went short on gold here and we smashed our TP1. And as you can see here, look, gold in the 1 minute, we bought down here and we sold up here, making massive money, 1-to-5 risk reward ratio. And you can see all of this for yourself in the link in the description to show that I actually know what I'm talking about. So let's head over to the chart and I can explain to you this step-by-step strategy. So the first thing we need to worry about are what times do we trade gold, okay? This is very important because gold is very volatile, but it's only very volatile at certain times. Now, the 2 times gold is volatile is London session and New York session. So we want to be trading gold between these 2 sessions. Now, this is between 7 a.m. to about 11 a.m. GMT, which is London time. So this is all London time because obviously I'm from England. So you can convert this to whatever time you have just by going into Google and searching it up. A New York session is from 1:30 p.m. to about 6 p.m. is when the volume stops working. But first things first, let's get this very clear. These are the times you want to be trading gold, between 7 and 11 a.m. and then take a little bit break for New York lunch, and then New York session starts at 1:30 p.m. and the volume stops working about 5-6. You can trade later, but usually we run out of volume and the trading isn't really worth it. So now we know when to trade gold, let's move on to the strategy. Now, the first thing we need to look at, and the whole thing basis around the strategy, is a concept called liquidity. If you don't know anything about liquidity, I have made a full guide on it, which I will leave in the top right hand corner. Go watch that video and come back. I highly recommend you watching it. I go through really in depth, step by step, every single type of liquidity, when to trade it, how to trade it, etc. So yeah, just look at that first. But if you're watching this, I'm assuming you know what liquidity is. So this is step 1. Liquidity. And we want to look for 2 types of liquidity. So the first type of liquidity is session highs and lows, and the other type of liquidity are higher time frame highs and lows. Now, session highs or lows, it depends on what session we're trading in. If we're trading during London session, then we're going to look for Asia highs or lows. If we are going to trade during New York, then we are obviously going to be looking for London highs and lows. And for higher time frame highs and lows, we are going to be looking at the 1 hour chart, the 4 hour chart, or the daily chart. So these are the 2 areas of liquidity we're looking at to enter our trade. Now, why we're looking for liquidity is basically a concept of manipulation. We want to see the market makers manipulate the chart so then we can take the trade in the direction that is being manipulated in, because the big movements from gold are where the banks are going to be trading it, and the banks only trade from manipulation. So we don't want to be part of the people who are getting manipulated by getting our stop losses swept, losing all our trades. We want to wait for the banks to sweep everyone else's stop losses, take the liquidity, and then we can trade the manipulation, and that is the basis for the strategy. Now, if I just go into a quick example of this, let's say price has moved off Asia session and we're now in London session, and price starts to create this kind of weird little uptrend and forms an Asia high up here. So this red line is our Asia high. Now in London session, which will start, let's draw a vertical line here. Let's say London session starts to the right of this line, and we start forming a bit of a downtrend, and all of a sudden we come up and we sweep Asia highs. Now above Asia highs is going to be people's liquidity. Now it's going to be resting liquidity. If you don't know why, again, watch my liquidity guide, but it's going to be where a bunch of people's stop losses are, because people usually trade breakouts from Asia sessions, and they're going to put their stop losses above Asia highs, and that means it's a great place for the banks to push price, take these stop losses, and then continue going down. So when we look for a liquidity sweep, we want to see price break a high or a low of the previous session. So once we've broken Asia highs, we know that liquidity has been taken, okay? The banks have taken this liquidity, and I'm now going to use it to manipulate the charts, and this is exactly what we're looking for. And I'll get into examples of this later, of where Asia highs are taken or the banks have manipulated, but also of just hourly highs, 4-hour highs, and daily highs and lows. So now we've covered liquidity and we kind of know what it is and why we're looking for it. Let's move on to the next step. Once we see liquidity being taken, we want to see a reversal, okay? Now this means once liquidity is taken, we don't just want price to take the liquidity like we have in this example, come back down and just continue in a breakout going up, because that is a manipulation. Manipulation is when we sweep stop losses, we take liquidity, and then we immediately, really violently go back in the opposite direction. So that is what I mean by reversal. Price created this little uptrend coming up, we were going up, we took the liquidity, and now we're reversing by going down. So how do we spot a reversal? Well, what I like to do is I like to drop down to the lower time frames and try and spot an entry. So what time frame I like to use is I like to use the 5-minute and the 1-minute charts for entries and also to manage risk. So we're going to be spotting reversals on the lower time frames. Why? Simply because we want to trade fast, we want to trade active, we want to trade not much, maybe 30 minutes, so how long we want to hold the trade for. And if we look for like 1 hour trades, we're going to be waiting for hours and hours trading, and I don't have the attention span for that, okay? So we're going to be looking at the lower time frames. And also, it's because I have found from gold, it moves very violently, and a lot of the time the reversal can happen in 30 minutes, and if we're looking at a higher time frame like the 15-minute, that happens in 2 candles, and we're not going to be able to get a setup from 2 candles. We want about 50 candles. So if we go to the 1 minute, in about 30 minutes there'll be 30 candles, and we can definitely get a good setup from that and a good trade. So from our reversal, we want to drop down to the lower time frames, and we are going to wait very simply for a 1 minute change of character. Now very simply, hopefully you guys know what that is already, but a change of character is when you're forming a trend in one direction and then all of a sudden you come down and you break the previous high or low and you change character. You are changing the direction of the trend. Now this means that the trend is most likely going to reverse, and as you saw in our example below, if we're looking for a reversal down here, let's say this is on the 5-min, this kind of push up here isn't going to be one candle or one smooth upward trend. It's going to be more of an uptrend on the lower time frame. So if we see that, and then we see in the 1 minute we sweep this previous low and we change of character, this is a really good signal that we are actually going to break this low and we're going to take liquidity and then reverse. This is what we call a change of character here, where we are forming a trend in one direction and then all of a sudden we look like we're about to reverse the trend, we sweep the low and we change a character. Now this can also be in the bearish direction, where you have a downtrend like so, and all of a sudden you come up and you break the previous lower high, indicating that there might be a bullish trend forming. So these are 2 examples of a change of character, and we are going to be looking for these on the 1 minute chart. Now it's very important to understand why we're doing this, okay? Understanding why the markets move, why we're trading this. And very simply, it is because we want to spot reversals, we want to spot manipulation. When banks manipulate, they take stop losses, the trades go in the same direction the people who are trading originally were going to go in, but the banks want to sweep the stop losses out, fill their orders and retrace. I go into much more detail of this in my liquidity full guide, but I can explain this very simply now, just quickly. The violent moves in gold, which is what we're looking for as this scalping strategy, only really come from manipulation. And manipulation is a great way to trade because it kind of works all the time. The tricky bit is to spot manipulation, and sometimes even if you're trying to spot manipulation, you can still end up having your stop losses swept, because at the end of the day, we're just not the banks. The banks have so much more trading power than us and they can catch us out. But what I like about this strategy is it works most of the time if you really learn how to spot it and you get more used to trading it. So once we see a change of character on the 1 minute, which is what we covered here, we want to look for step 4, and step 4 is a retrace into a continuation confluence. Now, a continuation confluence can be one of 2 things, okay? It can be a fair value gap or it can be an order block. Now, an order block is pretty much a support and resistance zone, or a previous candle where price has pushed price up, and a fair value gap is basically an imbalance, and you should know what that is. It's pretty basic. If you don't, then just go learn it quickly, or maybe this strategy is a bit too advanced for you. So if we go back to our previous example, here where we took liquidity, we want price to, let's say it was forming this uptrend on the 1 minute, and price took the liquidity at this high, and all of a sudden we create a really big down push after we swept the liquidity. Somewhere in this move there will be a fair value gap. Okay, we want to see price push into this fair value gap, reject off of it with a nice candle, and at this point is where we will get into, in this example, our short position, and we will look to be entering after that. So if I draw this again in a bigger example, price came up, broke this Asia high, okay, took the liquidity above this high, came back down, reversed like we wanted to, and in this reversal created a fair value gap or an imbalance in this zone. We want to wait for price to push up into this fair value gap and then reject off of it. And that is our next confluence. Once we see a retrace into a continuation confluence, we want to see step 5, which is a rejection. Now, rejection can come in a few ways. I think there's 3 main ways I like to see a rejection, and I've gone over this in previous videos, but I want to see an engulfing candle, I want to see a hammer candle, or I want to see big volume candle. Now, quickly, what all of these are: engulfing candle is when you have a candle going in one direction, like a bearish candle, and then you get to this fair value gap, which I will draw here by this blue box, and all of a sudden we get a bigger candle in the opposite direction at this area, which fully engulfs the previous candle because it is bigger. It finishes and it engulfs the whole candle. The hammer candle is very simply just a candle that looks like a hammer. It is where you have a long wick and a bit body like this. And let's say you have a fair value gap in this blue box. It shows that price came back down to this area, but this fair value gap rejected it so well that price pushed it from this area all the way back up to this area where the body is. And it shows that price is rejecting strong from this area. And a big volume candle is simply just a big fat candle. It shows there's a lot of buying power in the fair value gap, and this is a good confluence that this fair value gap is a good place to order our trade. So let's put all of this together. Okay, we have our same example. So we sweep Asia highs up here, we take the liquidity, we push back down, we fill this fair value gap that we've created in the chart, we get a hammer candle off the fair value gap. Now, how do we manage the risk? How to manage risk. This is the most important thing, okay? You need to be able to manage risk. If we're going for a sell in this example, we enter at the hammer candle, we put our stop loss above the high that swept the liquidity, and then we put our take profit and area of the next major point of liquidity. And I will get into this in my trades examples now. So that's the strategy. You can follow this flow chart, write it down. It is quite complicated, but that is how you trade, okay? We're not doing some simple bollocks here. We are traders. We want to understand the market, and this is what it takes. So follow this flow chart, all these steps. I hope you've understood. You can write all these steps down. It is really, really important. But let's get on to some real life examples. So this trade's actually going on right now, and this is a trade I took this morning. Now, I had to hold it overnight. It's not really one of my proudest trades, but we are still up about a 1 to 2.5 right now, which anyone would take a lovely 1 to 2 RR. But let's quickly go into why I took this trade. Well, if you go to the daily, what is the first thing we do? We look for areas of liquidity. Now, you might see all these lines on my chart and be a bit overwhelmed, but just ignore them for now. What I saw price do, I saw price was in a consolidation range, okay? When the price is consolidating, you sell at the top and you buy at the bottom. We're getting near the bottom, so we probably should be looking for a buy. Price also had this low on the daily, and what did we do? We came down and we swept the low. We see the wick down here, swept the low. If I get rid of the drawing, we swept this low down here, which is our first confluence. We also, if we drop down for 4 hour, we could see this low is more major, like so, and we did actually sweep this low. Once we see manipulation and we swept this low, it was a good sign that price might reverse and go into the direction we want it to. We then drop down to the 1 hour and we see once again, we swept this low. And we can also spot any areas of liquidity like so. And as you see, I've drawn out up here. There's low resistance liquidity here, all the way up here, which is what we will target as our take profit. Drop to the 5-minute chart. As you see, we were quite oversold. We see massive negative bearish candles. So this is analysis you do on the 5-minute. We see price is quite oversold. When price is oversold, you want to buy it back up before it then tanks again in the future. And finally, we drop to the 1-minute time frame and we spot our entry. So if we go down here, we see this black line was our area of liquidity. We did sweep it. We did come below it. We then come back up. We create a high, like so. We created a high. We then pushed above it, broke structure, change of character. We were in a downtrend, but then we then break the previous high and we create a higher high. Once we create a higher high, we wait for price to reject into a fair value gap. As you see, this fair value gap was a good entry point. We see a hammer candle out of this fair value gap. I then enter in this fair value gap, and I put my stop loss below the low and my take profit at this area of low resistance liquidity. And as you see, it has taken a while, but this trade is moving nicely in profit. And hopefully, I think we're going to see price break out this range and hit our take profit for a 1 to 5. Beautiful stuff. So that is a real life example of how you trade this strategy. And I really hope that you've learned a lot from this video. I hope you guys can take this into the future of your trading and start to implement it. Once again, join my Discord, link in the description. I post all my trades live there for you to look at, to learn my strategy, and also to show you that I am legit. I know what I'm talking about and I do trade profitably. But other than that, I'll see you guys in the next video. Peace.